On Friday, after the jobs numbers come out, we've seen the S&P and Nasdaq come crashing lower. And on Friday, the SPY was able to come down, hitting one of the targets. However, I want to warn you guys, it's not over with yet. There could still be a lot more pain out here for stocks. Now, over the last several weeks, we've seen the sentiment shift over to the bear side. And once again, on Friday, we are back in extreme fear territory. However, is this really a buying opportunity? Or is this just going to get more traders caught offside? We also had the most recent investor sentiment survey, another horrible reading out there. Look, we only had 19.3% believe the market's going to be bullish over the next 6 months, which is actually even down from the prior month at 19.4. However, there wasn't quite as much bearishness as the prior week with 60.6. This week coming in at 57.1, but again, still horrible readings out there in the market. And this is exactly the type of sentiment we start to see when a bounce is about to form in the market. We couple that with the fact that the VIX has been on the rise up once again. And on Thursday, I warned you guys that the VIX was predicting that either Friday or Monday would be an update in the market. And what do we see? We saw the VIX coming down on Friday, and we saw the S&P 500 actually be able to eke out a gain after having that early morning sell-off. So if the sentiment is at areas where we normally see a bounce in the market, why is it there's a 3.4 trillion market meltdown, which actually triggers JP Morgan, Morgan Stanley, and Goldman Sachs to abruptly change their outlook? We know they keep up and up in the S&P 500 target. And now when we go ahead and we scroll down a little bit, we can see that earlier this week, Trump imposes 25% tariffs against Canada and Mexico, leading to a 500-point drop in the Dow, alongside small drops in the Nasdaq and S&P 500. We can see right here, Goldman Sachs analyst David says in an investor note that equity valuations are not yet low enough to trigger a significant bounce. He believes that the stock market will only regain bullish momentum if the U.S. economy begins to show signs of strength. Then as we come over and look at what Morgan Stanley believes, that the stock market will see muted gains this year. And we can see the bearish tones that the big banks are putting out is substantially different. Last year, all three firms predicted the S&P 500 would soar to greater heights this year, believing that a Trump's presidency would create a favorable macroeconomic environment, where they predicted the S&P 500 to reach all-time high of 6,500 by the end of 2025. And let me know in the comment section down below, do you guys still believe the S&P 500 is going to reach 6,500 by the end of 2025? Now, it's not just me, a poor little YouTuber out there warning you guys about the economy, but right here, U.S. Treasury Secretary says, brace for economic pain. One economist thinks he is underselling the fallout. And again, we've been talking about this for quite some time. Everybody is hooked on government spending, government jobs, and now as Doge aims to go ahead and cut back some of that government spending and try to help get the deficit under control, we can start seeing a lot of people out of work. If we look at this month's NFP numbers, you see we actually missed. We only created 151,000 new jobs, and the forecast was for 159. However, the previous reading was 125. However, with all the layoffs, is that number about to go up? Because as we can see right here, Hartnett says the U.S. now is one bad payroll number away from a technical recession. I don't know about you, but the R word does not sound that good. And normally stocks are not going to respond very well if indeed we are in a recession. On Friday, we also had Jerome Powell giving us another warning. Powell says Fed is waiting for greater clarity on Trump's policy before making the next move on rates. And a lot of traders have been pricing in rate cuts, rate cuts, rate cuts. However, something that's kind of fishy out here. Earlier, just about 2 weeks ago or so, we saw the first rate cut wasn't being priced in until roughly September or October. Now look, the first rate cut's being priced in June. And if you actually come over and start looking at May, the difference between a no rate cut and a rate cut is now just 1.3% difference. So if indeed we do start to see worse economic data coming out, then we can actually see this start to shift. Keep in mind, we are only 10 days away from the next FOMC meeting. And some of the data that we might see out here this week, we have the JOLTS job openings on Tuesday, but then on Wednesday, we get the CPI data coming out. On Thursday, we get the PPI data coming out. And on Friday, we get preliminary consumer sentiment followed by preliminary inflation expectations. So we're going to see if indeed that does impact how the market is pricing in the next rate cut, and does the Fed live up to the market's expectations. Now, I want to make everybody aware right now, Apex having an 80% sale off all their evaluation accounts, passing as little as 1 day. And if you want to take advantage of this offer, use the link in the description box down below. Now, as we come over, look at the indices out here on the daily chart, I went ahead and threw up 3 moving averages. We have a 20 period moving average in white, the 50 period moving average is in blue, and the 200 period moving average is down here in red. And what do we see on Friday? The SPY spiking below the 200 period moving average, getting back above it at the close. We look at the QQQs, also spiking below the 200 period moving average, closing right near that area. However, the Dow still has not went down towards the 200 period average yet. Then we look at the Russell 2000 closing way below the 200 period moving average, and has been for quite some time. Notice we also have the 20 period moving average below the 50, and we have the 20 period moving average about to cross below the 200 period moving average. Now, recently for the Nasdaq, we had one of the longest periods in time going back to the 80s where we have not touched a 200 period moving average, and it was roughly right around 500 days since the last time that Nasdaq touched the 200 period moving average. Now, when we look at this stat right here, anytime we lose the 200 period moving average by more than 3.5%, look what has preceded right here, going all the way back to 2000. 2 weeks later, we were down 6.8%. Then we had a 1 year negative return of 43.34%. Then it happened again in 2008. 2 weeks later, we're down 6.2%. 1 year later, down 35.7%. Then in 2022 was the last time this occurred. We can see we were down 2 weeks later, 5.7%. 1 year later, minus 20%. So every single time it has ushered in a bear market. However, when it doesn't occur, when we fall below the 200 period moving average and we get back above it, notice 2 weeks later, only down 3%. 1 year later, up over 9%. So every other time this has occurred, it has been bullish for the market. So we are in a very critical period of time. That is going to be, do we continue to cascade lower? If so, if we drop by more than 3.5%, then it's going to be a very good indication that we may just well be in that bear market. Now, before we go ahead and jump into the charts, I want to share with you guys another critical stat. Keep in mind, we're going to be coming up on option expiration, which occurs on the 3rd Friday of the month. Now, if we go ahead and we look, right, let's look for the month of March expiration. And I want you guys to pay very close attention. The week before option expiration, what do we see? We've been up 26 times, down 14 times. This is going all the way back to 1985. However, the week after option expiration, we've only been up 15 times, down 25. So this is going to be a critical time that we most certainly want to pay attention to. Then if we look a little bit lower, when it says the trailing quarter was negative, you can see we've been up 9 times, down 3 times, then post OPEX, basically a 50-50, up 6, down 6. Another key thing to really pay attention to, 1% moves. When this has occurred, when the quarter has been negative, we have had 1% moves 8 times. We have had negative 1% moves 3 of those times. So if the market's setting up a dead cat bounce, that would make sense with that 1% move that stat just showed us. Now, as we start looking at the S&P out here on the weekly chart, notice we see that double top-ish pattern. MACD indicator down below us is also bearish at this moment, and this is going to be a critical point. Can we get a close below the swing point right here, which comes in somewhere around 575.72? If indeed we can get that close below it, then we have validation of this double top pattern, and that would give us a price completion down here about 537.50. Now, I want to go ahead and measure right up here from all-time high down here towards that pattern completion. That would bring the S&P 500 down roughly 12%. And notice, what do we have right at that double top pattern? We also have a high volume node out here on the composite profile as well. On the daily chart, however, the MACD indicator still looks horrible at this moment. We look at the 4-hour chart, MACD indicator is starting to try to flatten out later on the day on Friday. Then as we start looking at the 30-minute chart, we can see we do have a bullish cross. However, is this going to be nothing more than a dead cat bounce? Keep in mind, if we do start bouncing up this week, one of the targets I will want to focus on is going to be where we had this gap down. And to fill that gap, we need to come up to about 582.98. Now, one of the other things I do want to do on the daily chart is let's go ahead and grab our Fibonacci retracement tool, measure all the way up here from the swing high down here towards the swing low. Notice the first area I would expect the S&P to make it up towards would be that 38% retracement. And we know from history that S&P 500 loves to retrace to the 50% level, which would bring us to about 589.47, which is very close near this swing point right over here. And then we'll see, do we set up some type of larger ABC pattern to potentially take this market lower? Now, something I want to do real quick, I want to role play this out. And I want to go ahead and grab my Fibonacci extension tool. I want to measure from the swing high down to the swing low. If we retrace only up to the 38% level, notice that brings us very close towards that double top pattern. We actually make it towards the 50. Again, still relatively in the same area. That's most certainly something I am going to want to keep an eye on if indeed we do start to bounce out here this week. Now, as we come over and start looking at the futures markets real quick, notice we're closing right near the high volume area on the composite profile. If indeed we do start to get a bounce this week, then I want to look at this high volume node right up here, which comes in right here about 58.27.5. Now, something that did not take shape this week was the fact that 2 weeks ago, we had this value area low that the market closed below it. Now, since each one of these profiles in blue represents 1 week in time, that is basically how we're going to define a session on this chart. And whenever we close outside of value, normally within the next 1 to 2 sessions, we would come back and test value, which a value area low in this case would be 6107.25. However, when we do not retest value area low, in this case within the next 1 to 2 weeks, then quite often it is an extended period of time before that market ever makes it back towards value. And in this case, back up towards these upper levels. Now, as we start looking at the weekly profiles, value area low is going to be about 5731.50. The point of control is going to be right here at 5764.00, and value area high is going to be up here about 5845.50. Now, if we do see a rocket ship up, maybe with the CPI data or even PPI data this week, we start getting above value area high, and then you see us start to turn back down. I would then want to turn my attention back down towards this high volume node and last week's point of control. As we come over and start looking at the daily profiles real quick, notice we're closing right near the highs of the session on Friday. However, something we talked about on the live streams, speaking of the live streams, if you guys don't want to miss the next time I go live, make sure you're subscribed, get the bell notifications turned on for all. This week, we're going to be giving away 2 50K Take Profit Trader accounts live on stream. So what we were talking about on stream was late on Friday, can we potentially get a retracement back down, maybe towards the 38% retracement or even the 50% retracement? And we did get a little bit of a wick down towards the 38. If we start coming back down here Sunday or even early Monday, I want to see, can we break below that, maybe try to firm up around the 50% level, and that would set up another ABC pattern on the way up. Was this minus development area on the profile from Thursday, and we also have a structure breakdown point, which the market still has not been able to come all the way back up and retest. And when we went ahead and we drew out this potential A to B equals C to D pattern, if we drop all the way down to the 50% retracement, that would still bring us well above that area. And if we were to drop down, let's say a pullback down towards the 61.8, that would bring us towards the upper part of that area, right near that structure breakdown point. And even dropping down towards the 78.6 would bring us very close towards that minus development area. So again, if we do get that dead cat bounce this week, this would be the ideal setup that I would like to see play out. Now, recently we've been seeing the dollar index on the move lower. So let's see, will this hammer on the dollar index start to get the market to bounce up? And whenever we see the dollar going down, normally we expect to see gold on the move back up. Gold not that far near all-time highs. However, is gold about to produce a lower high, which could take it down towards the 38 or even 50% retracement, maybe even fill in the gap from contract rollover? You can see the MACD indicator on the daily chart is still bearish out here on gold. Then as we jump over and take a look at crude oil has been selling off. And on Friday, starting to get a bit of a bounce. If you're a crude oil trader and you're looking for a bounce, watch for it to go to 70.26. If this low does not hold, watch out, it could get extremely ugly. And again, this is another indication that maybe, just maybe, we're in a recession. If we weren't, we would see crude oil prices actually on the move up higher. Now, let's not forget, we still have companies reporting earnings out here this week. And when we look at what should be some of the big movers out there, really on Wednesday, we have Zim expected to move plus or minus 17%. Then on Thursday, RBRK expected to move plus or minus 20%. We also have DocuSign, DG, Alta, Adobe, Oracle. Then as we jump over and take a look at the Nasdaq, the QQQs real quick, notice the Nasdaq has that potential on the weekly chart of a double top-ish pattern. Nasdaq also closing below the swing point right over here at a price point of 500.30. MACD on the weekly chart also is bearish at this moment. So could the Nasdaq be on its way down towards this high volume node at about 435.93? Keep in mind, if we measure from all-time high right down to the low out here this week, the Nasdaq's been down 11%. If we drop all the way down towards that high volume node, that would put the Nasdaq right on the threshold of a technical bear market, being down roughly 19.37%. We jump over and start looking at the daily profile. MACD on the daily chart looks horrible, but a dead cat bounce is likely going to occur in the very near future. If we go ahead and we grab our Fibonacci retracement tool and we go ahead and we measure from the swing high all the way down towards the swing low, keep an eye on the 38% retracement. It correlates very closely near the swing point right over here, which would be a natural area of attraction out here for the Nasdaq if indeed we start to get a bounce this week. And then we'll see, can we go a little bit higher, maybe even up towards the 50 or 61.8 level, setting up a larger ABC pattern on the way down. 4-hour chart, we're starting to see a little hook effect. The MACD indicator is starting to base out. We did have a nice little wick on the bottom of this candle, but we also had a wick on the top. Then we jump over and start looking at the 30-minute chart. MACD indicator is crossed to the upside. And notice, as we made this low out here on Friday, notice the MACD indicator was not producing a new low. So we actually technically have MACD divergence, and we have a gap right up here above us, somewhere around 502.13. And we'll see if the QQQs can fill the gap out here this week. As we jump over and start looking at the Nasdaq futures on the 4-hour chart with the weekly profiles, notice we're closing right near the point of control. And as we start looking real quick, value area low is going to be down here about 20,058.75. The point of control is up here at 20,181.25, with value area high being up here at 20,570.25. Now, as we look to the right, notice where we have the most amount of volume in the general vicinity. That's going to be right up here above us, and that would be a natural area of attraction for this market. As we come over and start looking at the daily profiles on Friday, we kind of have a P as in Paul shaped profile with value area low being down here at 20,021.75. The point of control coming in at 20,171.75 and value area high being 20,254.25. Now, just like we talked about with the S&P, I would love to see the market go ahead and retrace a little bit Sunday or even Monday, maybe down towards the 38 or even 50% level, give us an opportunity to set up an ABC pattern on the way up. Keep in mind, we also have this minus development area on the profile out here from Thursday, and we have that structure breakdown point that still has not come back and been tested. Now, that area is good. I'm going to go ahead and zone that whole minus development area out. That's going to be anywhere from a ballpark of about 20,523 up here to about 20,588. So if we go ahead and we grab our Fibonacci extension tool, we measure swing low to swing high, we pull down towards the 50% level, notice that would give us a price completion right within that minus development area of the profile. If we stop at the 38% retracement, that would bring us a little bit above it, and the 61.8 level would bring us just below that level. So let's see, do we get a pullback either Sunday night or Monday, which could set up this ABC pattern on the way up? Now, if you guys like to learn which prop firm has the best payout policies, make sure to watch this video right here.